Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago. Joining me today, as always, from frigid Kansas, Director of Feed Foundations, Mr. Jake Kingsley. Returning to the Grain Feed from Platteville, the Paris of Southwest Wisconsin, feed market advisor, dairy market advisor, utility player, all things EverAg, Miss Jenny Wackershauser. Team, how are we today?
Pretty chilly here too.
We have had a pretty cold stretch up north, but I understand Kansas kind of got beat up a little bit. You've had ice, snow. There's a lot going on.
Yeah, a lot different than Texas. Although people are saying they could get like maybe a foot of snow across DFW tomorrow.
A foot of snow in DFW.
We don't have any snow in Wisconsin.
That's the claim. That's what the people on the internet are saying.
Now, I don't want to get canceled, but is that the end of DFW as we know it?
It will be for at least a couple days.
I think that's where EverAg HQ is. Are we going to be okay?
We're going to have to go down there with shovels, I think. It's going to be tough.
So. That's going to be the next assignment. Get down to Dallas with your shovels. It's time to rock and roll.
Like Lambeau Field, everybody has to come in and help shovel out.
Oh, goodness gracious. Well, we'll be thinking of everybody down there and hoping that they don't get hit too hard. It's winter, Jenny, right? We were talking with Cody last week on the show. It's winter. It is pretty stinking cold, but it's winter. We're used to it. We're ready to rock and roll. Happy 2025. Jenny, everything okay in the Paris of Southwest Wisconsin?
Actually, we are finally cold. We had a fairly warm fall, and finally seeing those like low overnight temps around 0, but most of our snow has melted, so we'll take it. That's a pretty mild winter for us.
This is how it's supposed to be. This is the natural way of things up north, right? There's certain bugs to kill, soils to freeze, right? This has to happen.
We need the ground to freeze. We need all those things to happen. So
you just learn to like it. You just learn to like it. Kind of. Not really ever. But we have a new format here on the Grain Feed in terms of the timing this week. It is Wednesday afternoon, not Thursday morning. So, Paige, if you would kindly timestamp the broadcast, it is Wednesday. It's about 3:20 on Wednesday afternoon. Happy hump day to everyone. But by the time you're viewing or listening, it will be Thursday when we usually record. So I had to make a special note, and the markets are closed. I don't even need a real-time live update of the market. On Wednesday afternoon, March corn closed down 4 cents at 4.54. So a slight pullback here in the grain markets today on Wednesday. We did have wheat pull back a little bit after a brief resurgence over the last couple sessions, but that was down 6.25 cents on March. Jan beans down 4 3/4, so back under 9.90 for Jan beans. And then we've had Jan meal, not so stubborn little byproduct, at least over the last 3 or 4 sessions, we've had meal pull back and is now down below $300 per ton. And we had that March contract just above 300. It did break it earlier today, but March meal is down $270 today at $300.80 per ton on meal. So there's a lot to chat about, certainly in this slight pullback in the grain markets ahead of the WASDE report on Friday. But first, Jenny Wackershauser, which means feed mill in German. Is that correct, Jenny? Wackershauser?
Nope. Actually, Crazy House, I think, is what we learned at one point.
We'll take a look back at the archives. I think Jim's asked this question a couple times. It has a few meanings.
I think a nice German lady on vacation one time told us that. That's what you thought it meant. I don't know.
What did you think it means?
Crazy house?
You know what? Feed mill, crazy house. I could see it going either way. I could definitely on the day. It depends on the day. But Jenny, it was a lot going on here in grain. And of course, I think the market is focused on Friday's WASDE report for sure. But let's take a look at milk. because we've had some strength in the milk markets lately. We were debating how to phrase it, whether that's counter seasonal strength or unseasonal strength or unseasonably strong. We were trying to come up with a way to discuss it, but maybe you can help us determine what exactly are we looking at with these milk pricing.
Correct. So generally for our class 3 friends, when we talk milk, January, February tends to be our weakest time of the year. Once we get through that holiday buying, get into January, usually the last hurrah is buying ahead of Super Bowl. So we're kind of getting past that, and we've seen really some strong moves on the back of the whey move. So whey had a real strong rally in the month of December. That has peaked out here, and now cheese has followed a bit. We found a bit of a bottom at $1.65, $1.70 cheese. We've moved back up into that $1.85, $1.90 territory, and it has given a little bit of strength to class 3. Kind of a quiet move, but has moved us right back up into that 2050 territory for January, February, March. Doesn't seem to move a ton off of this spot we've been in. So we are trying to eye it up on how much time we have left in this. Will it last through the next few weeks, or are we starting to top off and get a little top heavy here on this move? It gives us a nice look here at most of the forward curve for 2025 up towards $19.50 to $20 milk on an average. Class 4 has been real steady Eddie. Not a lot of movement there. Also over $20. So for producers, as we've talked for a while, that profitability number, that milk over feed cost, is still in a really nice spot that is worth looking at and making your plan. What kind of tools are we using? Are we using DRP? Are we going to use options? Do you want to sell some milk here? Like, look at the different tools and kind of find a plan, because it's very odd, we'll call it. That's that counter seasonal discussion for us to hang up here this long. Our dairy products report came out on Monday, and as we looked at those numbers, there was some interesting numbers, we'll call them. Wisconsin was down on cheese production, surprisingly a little bit. We'd also heard that they're a little tight on milk, so we think maybe we were just not making that extra cheese we tend to make when we have an abundance of milk flowing through. Also, skim milk powder, when we talk about the California bird flu, which is now through over 700 herds in California, that continues to be kind of a rolling number through since the 1st of October. That seemed to hit the skim milk powder numbers when we look at that dairy production numbers for November versus cheese. Their cheese numbers weren't off that much, but skim milk powder was. So again, that's an export market. We don't tend to use that internally. So when we look at those numbers for the US, we're still very dependent on exports for cheese. We saw that in those values year over year. We're over 16% higher on cheese exports in a fairly flat production year and a fairly flat domestic demand. So we need to keep those export orders going. And right now, price-wise, we are not very competitive in that world market on cheese. So got to see kind of those things at play will continue to kind of dictate what 2025 looks like, I think, on class 3.
Okay, understood. And you brought up the milk over feed costs. I think we've had a lot of folks in a vacuum, let's say, just watching that corn market gradually make its way, into an uptrend, at least for old crop like March, May corn over the last month or several weeks. There's not a lot of heightened concerns, I think, because milk is now currently trading where it's trading. Jenny, you approaching this milk market here on behalf of our dairy farmers, is this something where you are feeling bearish and therefore want to step in and make sure you get something done? Or is it more of hey, given where milk is, feed does overall remain lower, especially with meals pullback lately, that margin still looks pretty good just looking at milk over feed. Is it might as well just get something done?
I would probably put us in that category. I'm cautious about the questions in our market for 2025. So we know we're bringing on a ton of capacity. We've talked about that a lot on these episodes, I think. Bringing on a lot of cheese capacity with a market that is very tight on heifers. So depending on who you talk to on any day, they'll concentrate on one of those two, it seems like. So we have the ability to make a lot of cheese, but we need to find the milk in the right locations. Bird flu continues to be a worry. We've got some major milk sheds like Wisconsin, Minnesota, New York, a lot of those areas that are large cheese producers that have not had a significant outbreak yet of bird flu that we're aware of. And therefore, if that comes in and hits at the wrong time next year, there goes that milk production and there goes that extra cheese capacity. So there's still a lot of questions that are worth talking through and making a plan with guys because there's enough questions in the market. I don't know if anybody per se is bearish or bullish without knowing all of those things yet, which we won't know till we kind of progress through this first half of the year.
Also, then the transition of things we don't know quite yet, but we've got the big WASD report on Friday. What are your thoughts for Friday's report? How should folks be, I guess, positioning themselves heading into it, and what to expect then for the coming months once we do get through it?
Soybean meal and the soybean balance sheet continues to be burdensome. So we keep watching more that play between soy oil and soybean meal as far as where meal's going to go this year. So we've had a little bit of strength the last couple days in soy oil, pushed us back over $40 per hundredweight again, and there went meal back to 300. We finally saw some movement, got up to 320s because oil fell below $40 for the first time in a while. That whole time, $10 beans. We just kind of hang here at $10 beans every time we make one of these moves. So beans themselves are not moving a lot. So it's very much that play along with that crush margin for the soy crush world. Corn continues to be, I would call that almost our stubborn little byproduct, though it's not a byproduct, but it will not break out of this 440 to 460 range. A month and a half ago, it didn't want to break out of that 430 range. We don't move a lot in a day's trade, but it just doesn't take those corrections lower that we seem to see in every other product. And a lot of that is the fact that a 1.7 balance sheet that we had on the last WASD is what I kind of call a balanced balance sheet. Well, we increased demand on that report. We've increased ethanol towards where it really can peak out at. We don't have new plants coming online. We have exports that are higher than we've seen in a long time. Can we keep that pace all year? And feed. Most people would argue if we're short on heifers and have a smaller dairy herd are killing chickens with bird flu and have a small beef herd, it's hard to justify a bigger feed use. So some of those numbers seem like they're probably at the tops of what USDA can do. So then we get into that supply side. They are notorious for doing big adjustments on the January WASD. Are they going to change yield? Are they going to change acres that surprises this and tightens up that balance sheet down to, we've seen 1.5 numbers floated around in the pre-estimates from some traders. Will that play through? And I think that's been part of the strength the last few days is some traders are already trading an assumption that they'll do that. And then that puts us into some new territory of maybe a slightly tight balance sheet versus that balanced balance sheet.
Yeah, and I think, Jenny, that is the debate lately. Is this corn strength? Is this because of the anticipation heading into the Jan WASD report, right? And I think the December WASD was surprising enough for folks that it helped maintain prices. And then as we get into the new calendar year, we've continued to edge higher, like you said. And is that in anticipation of what is presumably a tighter balance sheet on Friday's report? So like you said about the demand side, I don't know how much more room we have on demand. Someone earlier today brought up, well, if you look at the current ethanol pace, they could easily raise ethanol. And it's like, they seem to be maxing out on the demand side of things. It's also very early in the marketing year to get ultra aggressive on this current balance sheet in terms of demand, because if things change abruptly, especially with the new administration stepping in just a couple weeks in terms of how we trade this product globally, but also in terms of how we approach our renewable and green energy programs here in the US, it could be an interesting stretch. So, yeah, very excellent points, Jenny. Let's turn her to Jake for the analysis on the basis side of this market. And we talked about, Jenny said very eloquently, maybe it's corn that should be the stubborn little product that we're looking at, because meal has made a pretty nice pullback of $20 a ton over just the last 4 sessions. Pretty big swing for meal, and a fresh reminder that that stubborn little byproduct has also just been the volatile, maybe little byproduct over the last few years, and the past 2 or 3 weeks was no different. So what's been happening on that side of things, Jake?
Yeah, so I think if you start with corn, we saw some opportunity a handful of weeks ago now on basis as corn made this initial rally up into the mid 4s. By and large, cash values, basis numbers have been pretty stagnant since then. They've maybe in some markets crept up a couple cents. Other markets, maybe they just drifted a couple cents lower. But there was opportunity there, certainly, to get basis set on the Jan, Feb, March window. In some markets, you could get January through September at the target numbers we've been talking for many months leading up to this point. Took advantage of that where we could. I think we are maybe now getting into the last little opportunity to see any kind of big break lower in basis on corn, having made it through to 2025 now. The calendar kind of tends to push some grain out into the supply chain just naturally as farmers are looking to work cash and manage their tax burden. Having a nice futures price in this rally we've seen recently only helps that further. It does seem like ethanol margins have cooled off so that maybe those folks aren't propping up the basis values quite as lofty as they had been in the Midwest. We'll see here in the next couple of weeks just how serious this tariff rhetoric is and how that could affect Mexico's demand for our export products. So a couple of things there, but I think we've got just a few weeks left of opportunity here. And then it starts to get into, okay, how does the South American crop finish out and how are farmers looking at acres going in here this spring in the US? If you take a look at soy, like Jenny was talking, there's quite a bit of movement in a couple of different products in that crush. The rally in soybean meal futures, I think, helped out those that were still left unpriced on some of their remaining needs because the basis on soybean meal particularly felt what we would call biddable, meaning that you could get some pretty attractive numbers if you just called and asked, hey, what's your best number? But oftentimes, if you came back with a little bit better value yet, said, hey, I'll buy X number of tons for this time period at this little bit lower price, a lot of folks were coming in and saying, yeah, I can do that, and getting some stuff sold at even better value. So some opportunity there. I think seeing the futures roll back down gives you opportunity to price that stuff out. Maybe the one that's not reflecting quite as rosy of an outlook is canola, just for the fact that it does have to cross the border from Canada to get here. And if these tariffs do go into effect, there's a lot of uncertainty and question around how big of a price increase that would be, who foots the bill for that on any new contracts and existing contracts that are in place. And so there's some reluctance to go further sell more of that product by the suppliers. There's a little bit of risk premium already tacked into it and some uncertainty from end users as to are they going to stick with feeding this or should they start looking at feeding a little bit more soy or some other substitute product to avoid the hassle of dealing with that conversation. So a lot to figure out there in the next couple of weeks. I think a lot of folks are in positions to where they got good futures values on that, and being proactive in your conversation with your vendors now may help you to have better clarity when the time does come to not get just totally blindsided by some price hike or something like that. So conversations and transparency there. I think the other thing coming from this soy crush is that we're finally starting to see some indications of soy hull pellet values and soy hulls, loose soy hulls prices coming down. We've talked with some folks in some of the eastern and southeastern rail dependent markets, as well as some of the western and southwestern rail dependent markets, and they've seen considerable decline in price for both spot and January through September numbers. There may be a few markets that are still lagging and need to see some fresh numbers here to see if they've caught that break, but that seems to be heading in the right direction after having a couple of months of really good crush and oil sales and just getting those pipelines reloaded. So taking a look at that.
You talked a lot about the Canadian flow here in terms of potential tariffs and what we do with that canola meal product that would come over the border there. I think the Canadians also gave us a bit of their own volatility over the last few days, right? We've had their prime minister step down from his party leadership, and then he will ultimately step down from government leadership in the coming months, which then will most likely trigger an election later this year. So I think significant in terms of, the prime minister had come down to meet President-elect Trump and already start some discussions between those two leaders. I think when President Trump steps into office here in a couple weeks, he'll only have a month or two to negotiate potentially with the existing Canadian political leadership. So that'll make things even more interesting in terms of some of those cross-border, trade dynamics that we are already very heightened in terms of our concerns there. So We'll keep a sharp eye on it. Before we go, real quick, we'll borrow from Phil and Kathleen and go over some bold predictions on WASD Friday. Jenny Wackershauser, bold predictions, Friday's WASD.
They don't change anything.
Oh, that is next for January WASD report. That's a shockingly bold prediction.
We've done all of this and they do nothing with yields or
what?
acres.
I think that's fantastic. All right, Jake. Now it's your turn, buddy. Bold prediction. Friday's WASD.
I think we're going to see this thing go a couple different directions. I think you're going to see corn yield come down 1.5 bushels. I think you're going to see bean yields go up 0.7 bushel.
Oh my, 0.7.
And then you're going to see South America take its first real haircut on production for the year.
Oh, Brazil and Argentina.
You calling for $11 beans by Monday or what?
I don't know about that. We're going to see an increase in yield here in the U.S. too, Jenny.
That's right. Increase in U.S. yield, decrease in South American bean production, Jake.
Yep.
Yowzers. That is a bold prediction. I think we take corn yield down just a smidgen. I think it's going to be 183 even. We're not going to go below 183. We're going to cut it a little bit, just a tiny little bit, but we don't go below 183. And we're going to maintain a 1.7 billion bushel carryout on this marketing year's corn. We're going 1.7, maintain that. That's my bold prediction. So I know everyone else is going lower than that. Everyone else is going lower. And to stick with Jenny's, they're not going to touch South America. They're not interested right now. Next month or March.
They might raise Brazil. Argentina, I think they'll cut. They'll probably raise Brazil.
Ooh, I like this. We are at odds. Jake and Jenny, back at it. Well, team, these are some great predictions, great insights and analysis. As always, Jenny, thank you for returning to the show and potentially finding a translation to Wackershauser. We appreciate it.
Always.
We'd also like to thank the EverAg Insights crew for their support. Thank you to Paige for production magic. Thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.